Okay, so hello. Happy holidays to everyone. Happy New Year. So we are here to discuss our monthly recap of what happened last December, and I would like to share you at least a summary of what happened for the whole 2019. And I'm happy to share with our attendees that we are going to show you four of our new stock picks. Also, at the end, we'll actually tell you our year-end forecast for this year and also some basic valuations on how we came up with that valuation. So let's start. So we'll discuss what happened for 2019. We'll discuss what should you watch out for in 2020 in January. And we'll show you our stock picks, our old and our new stock picks. And we'll share you what is our year-end PSEI forecast. So let's discuss first what happened in December 2019. So in December alone, the PSEI went up by 76 points, so that's nearly 1%. We ended at 7,815.26. So what dragged the market? So actually, the baliktad, no, baliktad siya. So first, let's discuss the left one was what supported the market. So US agreed uh, to a phase one trade deal with China. So that's good. We know that there were several agreements that were discussed. So first was in terms of China buying more agriculture goods in US. In terms of what US agreed with China, it's to lay back or to roll back the existing tariffs in the near future. So that was good enough for them for a phase one trade deal. So that is expected to be signed specifically on January 15th. So probably the question next is what are they supposed to do? There's a talk regarding further agreements. So that's what lifted the market in the month of this December. Another thing was at the start of the month, actually we saw some stronger than expected Chinese manufacturing PMI. So we know that the manufacturing sector is the most affected in terms of the trade war. So a better than expected manufacturing data, specifically in China, lifted Asia. And given that we don't have any catalyst, it also lifted PSA a bit. So what dragged the market? So admittedly, it's very obvious that there was a risk of sentiment given the government's ongoing dispute with water concessionaires. So that actually dragged not only Manila Water, but also holding companies the likes of DMC and MPI, which has Maynilad as its subsidiary, and also Ayala Corporation, which has Manila Water under the said company. We also saw small outflows from the inclusion of oil giant Saudi Aramco in the MSCI Emerging Market Index. So given the inclusion of Saudi Aramco is the biggest IPO. It's also the most profitable company, ev- even more profitable compared to tech companies the likes of Apple, Microsoft, Google. So that's how big the company it is alone. So we saw some outflows after it was included in the MSCI. So same story. Since it was included, it some investors had to sell down other stocks. So we were one that was affected a bit, just a bit. So for 2019, we were up by to 350, nearly 350 points. So that's 4.7%. We ended at 78,175.26. So that was actually in line with our year-end forecast of 7,800 to 8,000. So people are asking for those who went sa Traders Playbook sa Mega Mall, sa Cebu, sa Davao. We said that was around Feb. Um, that yung year-end forecast was 7,572 specifically. But we revised it around April, May kasi we took into account more data. So there was more data, there was more positive data. We decided to lift it a bit to 7,800 to 8,000. So where did we mention 7,800 to 8,000? So we only discussed it if you watched our ANC One News TV interview. So we not only mapapanood mo siya sa TV, you can also actually see it. We post it sometimes online. So we always mention that our year-end forecast was 7, 8 to 8,000 for most of the year. So there. But nevertheless, we are more proud specifically of our stock picks, which we'll show later. So what dragged the market for the year? So of course, uncertainty in US-China trade talks for most of the year. We know that there was a phase one trade in December, but we know that for most of the year, there was uncertainty regarding to what Trump is saying, what China plans to do, what US is actually planning to do, and the like. So that actually made the PSCI traded just within a range instead of a clear trend in 2019. We know that there were global recession fears in the middle of the year. We know that especially that the data of possible recession mostly came in Europe, in US as well. So in specifically in Europe, in terms of their growth, their GDP growth, it's just nearly flat. It's less than 1%. So when there were countries the likes of Germany, France that that, that hovered below or that actually negative growth, they didn't grow at all in a certain quarter, that sparked recession fears. And then we saw in the US the inversion of the yield curve, the two the 10-year and the other yield curve. So that actually sparked recession fears. Um, so there. We also saw in the local side, we saw some MSCI rebalancing. So the Philippines was downweighted last May, August, and November. So since we were downweighted, we were sold down not only by local investors, but mostly foreign investors. So we saw lackluster earnings only in the first half. Specifically in the first half, we saw the likes of DMC, Semirara, um, the likes of Ayala Corp, um, and the like. So that actually dragged sentiment. Of course, we saw some outperforming companies, the likes of First Gen, Globe. So there, how could we forget? So one company that did not perform well was Jollibee. So that was really memorable. So slower than expected GDP growth in the first half. Remember that we saw GDP going below 6%. So we saw 5.5, 5.6% GDP. So that spooked investors. Of course, we attribute that to the slower um, spending by the government after the budget was delayed. The passage of the budget was delayed. Excuse me. So what did support the market? So we saw our central bank, BSP, and also the US Fed cutting rates. We saw the BSP cutting reserve requirement ratio there. So that is expansive monetary policy. So they're releasing um, money into the system para mas maging liquid. So that's good for the market. They took it very well. So that supported the market. We also saw muted inflation rate here in the Philippines. So what spooked the market last 2018 specifically was higher than expected inflation rate. We saw as high as 6.7. This year, in 2019, we saw inflation as low as 0.9% and the like. So that supported the market. Um, so there. In terms of the chart, when we take a look at the chart, we are still trading within the range. Um, After today, we are now at around 7839. So we're still trading below key moving averages in terms of short-term momentum. We're still below the MACD is still trading below the signal zero lines. So if we see those signals, it means that we should not be too aggressive yet. We can accumulate, but we should not be too aggressive yet because we might be sold down. And I will show you the next slide, the bearish possibility in the chart. So in terms of looking at the chart, the recommendation is trade conservatively. So you could trade the range, continue to trade the range between 7,500, 8,000. You can buy around 7,500. You can sell if it fails to break above 8,000. And of course, time to aggressively accumulate is should the market break and actually stay above 8,000 for a while. So we saw some several breakouts last 2019, but it did not stay above 8,000. So there. So this is the bearish possibility. So some technical analysts here are already recognizing the possible formation of head and shoulders pattern. So you can see the shoulders at the first and the third curve. So the head is actually the second curve. Um, Basically, what this pattern or what we are seeing as of the moment is if we break below 7.6 and we actually stay below 7.6, that is actually bearish and could be detrimental to the range bound market as of the moment, could actually turn from range bound to bearish. So actually last December we saw PSEI trade below 7.6, even 7.5 within the day. So that's the day we actually saw a 300 point swing. So that was very fortunate for us that it stayed above 7.6. So those are the key levels we should watch out for. There's 7.8, that's a short-term support. 7.6 is the support if we want head and shoulders pattern not to happen. And there's a 7.5, the range support. So there. So this is the thing we should watch out for this year. So there. So what should we watch out for in the month of January? So still, US-China trade developments. So for the past, since we started the webinar, hindi ko na tinanggal yung bullet points regarding US-China development. So the question is, what's next after the signing of Phase 1 deal on January 15? So that's the that we should watch out for, um, especially the rollback of existing tariffs. That is actually one main part of the Phase 1 trade deal. Of course, uh, should they actually roll back the existing tariff, that will be positive for the market. Although it is already mentioned, the actual implementation of that will be bullish in the market. So we know that both US and China are pretty fickle-minded in terms of what they're saying. So we have to take into account if they actually do what's part of the Phase 1 trade deal, that will be positive for the market. Of course, we should continue to watch out for the manufacturing numbers. If we show some signs of slowdown, it means yung mga existing tariffs, naapektuhan pa tayo. So that's the thing. Naapektuhan pa US and China as well. So that's the thing we should watch out for. So fortunately, we're seeing improving manufacturing PMI numbers. So hopefully, hindi natin siya masyado isipin in terms of kung magko-contract ba yung manufacturing sector and the like. Excuse me. So inflation. So we would like to see inflation to continue to be muted in terms of growth. So BSP's estimate or yung target of the BSP is 2 to 4%. So should inflation stay 2 to 4%, that's actually good. So for the December inflation to cap of the year, the estimate is 2%. BSP's estimate is 1.8 to 2.6. So I would like to emphasize that for 2020, we should see inflation 2 to 4% lang. So para in line with the target of BSP, and we don't see some sudden monetary policy changes. So there. So we also have the US Fed interest rate decision on January 30. So in terms of the Fed interest rate, it's from before it was more of a market moving a bit, but as of the moment, it is expected that the Fed will do little in terms of monetary policy. But at the end of the day, what we want to see from the Fed meeting is the statement of Jerome Powell, the Fed chairman after. So what the statement will include what the Fed is seeing in terms of economy. So still very important meeting. So, of course, the last bullet, water concessionaires and the Philippine government, what to watch out for. Specifically on January 6, I believe there will be a statement from President Duterte regarding the water concessionaires issue. So they're very volatile. So bottom line, we don't actually, for long-term investors are not yet recommended to buy aggressively those stocks involved because it is very volatile. So should it come positive, that's the time you can accumulate. If it's negative, good for you because you didn't actually have a position now. So there. Stock picks. So first is Robinson Stand Corporation. Our target price, as you've mentioned, for months on is 30 pesos. So as of close earlier at 29.50, it only has a 1.7% upside. But we continue to be positive in this company. So what we are telling you is for long-term investors to hold and buy more if it pulls back. So hold and buy more if it pulls back. So hold ka lang ngayon, babuy kapag nag-correct siya. So to reiterate what we like about Robinson Stand Corporation, we know in the property sector there are still issues regarding the certainty of the Philippine offshore gaming operators. What we like, that's why Robinson Stand is our top pick because it has one of the least exposure sa POGOs in terms of sa office portfolio niya. So out of the how many square meters, 2.9% lang yung ina-allot niya sa POGOs. So that's good because such companies like um, Diamensis Philinvestland, Megaworld, around 30, 20%, and 14% respectively yung exposure nila. So for Robinsons Land, it's only 2.9%. So that's good. Besides that, it has an international venture in China, Chengdu specifically, so that will contribute further as we go along this year. So it's already been contributing sa 2019 and it will further contribute to 2020. So that is good. So besides the domestic recovery in residential sales, small office space, they have an international venture that you can actually rely on in terms of numbers moving forward. As for this is one of our new stock picks, SM Prime Holdings. So basically the new development here is we are now pricing in the Pasay Reclamation Project. So in terms of how we value it, we value the 360 hectares property at 170 kilometers, 170,000 rather per square meters. So that is our conservative valuation because we know di pa naman siya tinatayo. So our valuation is conservative. But once nakatayo na siya, you know that the current price of the land there is around 300 to 400,000 per square meters. So there's upside. So actually, besides Robinson's Land, SM Prime Holdings also has less exposure from the Philippine offshore gaming operator. So in terms of office space, nearly 0% yung exposure ng SM Prime. So most of its exposure ng mga POGOs is mostly sa residential side. Pero in terms of sa office, nearly 0% si SM Prime Holdings. So our target price for that is at 46. So same. So for those currently holding, buy more when it pulls back. So there. So Megawide. So Megawide has been a stock pick that has been not so bullish for 2019, but in terms of fundamental earnings prospect for 2020, really positive. It booked a high depreciation expense in 2019. But of course, kakatayo lang ng airport terminal. So you expect to book bigger depreciation early on. So moving forward, they're expected to book less depreciation expense, and we are now given the opportunity to further appreciate its earnings prospect from its actual business, excluding the depreciation and the like. So in terms of construction, given that Duterte will actually sign the budget already I believe it's on Monday as well. Um, Once he signs it, in terms of the construction sector in the Philippines, further upside talaga siya. So it will actually benefit Megabyte, which has the capacity to win projects given its competitive advantage. It is both a construction and engineering company. So there. Our target price is at 23 pesos. So our patience are hopefully will be bibigyan na tayo ng reward this year, hopefully. So there. As for pure gold, these are one of our consumer plays. Not so bullish for 2019 in terms of price action, but we continue to like the fundamentals. Um, of course, bumababa na yung price ng rice, and we notice um, that its target market, low to mid-income household, will actually benefit the low price of the event of the lower price of rice. It should foster traffic growth. It should make them buy more inside Pure Gold given the lower price of rice. For example, if may budget ka 2,000, mas marami ka mabibili. So, there. And besides that, they own SNR. And the less aggressive expansion of its competitor gives SNR opportunity to grow and take advantage. So if you take a look at the earnings of Pure Gold, Pure Gold, the company, you will actually see significant contribution already from SNR alone. So that should be exciting for the company moving forward. So imbis na Pure Gold Supermarket ang titignan natin, we should also take into account SNR already in buying the stock. So there. 54 pesos your target price. So this is one of our new stock picks as well. Century Pacific Food. So Century Tuna, Birch Tree, sila yun. So in terms of the growth drivers of CNPF, we expect their milk and coconut segments in terms of market share to continue to grow. So if you recall last October when Philippines and Russia met for a meeting, Century Pacific actually benefited from that because it made a deal that yung coconut business sa CNPF will be exported to Russia. So that is further growth for them. So also in terms of, take a look at the valuation, the numbers naman, even not only us, but other stock brokerages see CNPF's earnings growth to outperform its peers namely San Miguel Food and Beverage and URC. But mas mag-grow pa yung CNPF in terms of earnings growth. And you can see the first couple of reasons why. So in terms of valuations, mura pa siya. So we have upside. We have time to buy Century Pacific. If you take a look at the price action earlier, it closed at 15.50. And that's actually the resistance level we are currently seeing as of the moment. So you can, for long term, you can buy now. For those short term, you can buy once it breaks above 15.50. There are lots of sellers. So if maubos yun, we have further upside for that. So target price is at 19 pesos. So you have pretty huge upside for that. Next. Another new stock pick of ours is Robinsons Retail Holdings Inc. So our issue why Robinsons Retail Holdings was not one of our stock picks before is because we saw Rustans as a drag given kaka-acquire lang sa kanya. We saw that as a drag in 2019 but for 2020 given its current share price now, we see that the earnings dilution is already priced in. Also, given the Rustans is already nearly profitable, it already nag-break even na siya as of third quarter alone. So for 2020, we will now see the impact of Rustans, the better impact, the positive impact for RHI moving forward. So there, our target price for RHI is 88 pesos, so that's nearly 10% upside. Another new stock pick is Universal Robino Corp. So we talked about earlier sa CNPF that it's trading at expensive valuations compared to its peers. But now, for URC, of course, although it's trading expensive compared to its peers, you have to take note that historically, its PE of 25.9 is actually below its historical mean PE. So, although it's expensive to peers, historically, yung layo ng valuation niya sa peers should be mas malayo. Of course, you're pricing in all of its domestic, its international business, its brand equity. So for us, what we're seeing is your URC should trade higher compared to its current price. So let's discuss each segment. So at the second reason why URC is a buy for us, for coffee, we expect market share gains to be more visible in the next 12 months. Coffee, its coffee business is great taste. For ready to drink, of course, volume growth has remained strong despite not being allowed to be sold in primary secondary schools. Of course, that's because of the nutrition requirements. For salty snacks and noodles, we expect the stable inflation. We talked about inflation earlier, expected to be flat or muted lang. So given the muted inflation growth, we expect the snacks and noodles to actually benefit from that. So our target price for yours is at 166. So for Axilum, so in terms of Axilum, in terms of the fundamentals, not only us, but other stock brokerages see Axilum already cheap. But of course, its bearish price action is still holding them back. But for us, we would like to see more on the fundamentals, and the fundamentals are still there. Nothing changed. If you take a look at the second reason why we like Axilum, in terms of its earnings last third quarter, bottom line, its net profit improved. Of course, lower coconut prices will drag its top line, its revenue, but at the end of the day, it actually still improves their net profit because kahit mababa yung revenue nila, bumababa rin yung cost nila. So, of course, at the end of the day, we would like to talk about the returns. And the returns come from the bottom line, the net income. So, given the better net income, further upside is seen for Axilum. In terms of valuation, it's really cheap as of the moment. So, the question you're probably asking, our target price is at 6 pesos. So, the question is, aabot ba yan ng 6 pesos within the next 12 months? Of course, that is unlikely. But, that is the value of the company within the next 12 months. So, in terms of price action, we appreciate yung 10% growth niya kanina, and we do expect investors to further appreciate the business as the year goes by. So it could actually go as high as 3, 4 pesos. That's actually huge upside from now. But at the end of the day, if by the end of the year, if it ends at 4, 3 pesos, even 5, it's still undervalued because the value of Axilum within the next 12 months is at 6 pesos. So we hope that we made you clear on why we like Axilum and the target price and its implications moving forward. So there. For banks, we like PNB. Our target price for PNB is 56 pesos. Of course, its recent move towards focusing on the retail sector is beneficial for them because banks earn more in lending to retail and mid-markets compared to corporates. So that is actually a fun fact for you guys. How will it do that? Ano yung bala niya? So it actually raised 12 billion from its stock rights offering last July. So it will use that to actually ramp up its retail and mid-market loans. So you will notice, diba, sa radyo, you'll hear PNB commercials already. So they're trying to reach out to people like us. So there. So in terms of the stock pick of our research partner DBS, it remains to be Metro Bank. So there are upside for several banks in 2020. So one is PNB and one is Metro Bank. So besides it being the cheapest amongst other banks, we know that the BSP has cut reserve requirement ratio. So it is a better environment, better business environment, better lending environment for banks in 2020. So question is, ba't di natin bilhin yung BDO, BPI for long term? Of course, doon na tayo babalik sa valuations part. So, saan ka ba mas may upside? given better banking environment, saan ka mas may upside? So we see PNB and DBS sees Metrobank as such beneficiaries. So there. So Cebu Pacific remains to be one of the stock picks of DBS. So Cebu Pacific in terms of earnings of Cebu Pacific this 2019 it doubled its earnings basically because of a disappointing 2018. But at the end of the day, valuations are still undemanding. Mura pa siya as of the moment. So I believe it ended at 88 pesos earlier, nearly 88 pesos. So we have huge upside for that. So there. So I'd like to take this opportunity to promote our Traders Playbook Report. Um, of course, the stock picks we've mentioned just a while ago are for long term. Of course, for short term investors, you can trade those that has bullish signals, or if you want to bottom fish some stocks, that's okay. But of course, we created the Traders Playbook for those who are really for short term, and we could take advantage of the price action. We could take advantage of cheap stocks. We could take advantage of bottom fishing stocks na bugbog na talaga. So there, that's the purpose of the Traders Playbook. So what's nice about the report is we will tell you when to enter, we will tell you when to exit, and most importantly, we will tell you when to cut loss just in case the report is wrong. The forecast is wrong. Of course, nothing is, wala naman laging tama kahit sinong brokerage pa. But at the end of the day, risk management is key. And that's what the report is providing to you, risk management. So we provide cut loss. There's also technicals on the second page, fundamentals on the first page. So complete report all in one. So there. So 2020 PSA forecast. So here we go. So as of end 2020, we see the PSI trading around those levels, 8,950 to 9,150. So that's around 14 to 16% upside from the close earlier. So in terms of valuation assumptions, in terms of earnings growth of companies, 7%. So as of third quarter, as of third quarter, um, as of third quarter 2019, uh, actually mataas no yung 2019 earnings growth as of third quarter 2019 is actually at 11%, but it's because of the bank's earnings growth, and the bank's earnings growth came from their non-core business trading gains. So expectation, so of course magugulat pa ba tayo next year? For example, the earnings growth of banks actually decline next year or this year. So we should not be surprised that non-core business will not sustain the growth. But its core business, what we're banking on, will be better. So in terms of valuations, actually our valuations last year in terms of earnings, 6.6% lang. Hence the 7-8 call. But as of now, we're bumping it up a bit, 7.3%. So this is where the valuation also came from. In terms of price to earnings ratio, we expect 16.8 to 17.1 times. So this last year it was only at 16 times, and lackluster earnings growth, and that's why that's how we came up with the 7-8 call. So of course there are lots of numbers involved in terms of how we came up with the 8,950 to 9,150, but in a nutshell, it's that. In terms of the why, we are now expecting better economic conditions in the Philippines. We're expecting GDP to rebound at least above 6%. Ma-approve na ni Duterte yung budget, masasign na niya. So that's upside in terms of government spending. Consumer confidence is improving, so consumer spending is likely to improve. So there. So in terms of some economic assumptions, GDP growth 6 to 6.5%, inflation 3 to 4%. So that's actually in line with BSP's forecast or target of 2 to 4%. So there, in our traders playbook, we'd like to share you further details of our stock picks, of our the meat of our PSI forecast. So there, yun. So of course, So of course, the bull market or the bull will take control this year should walang any drastic events the likes of trade war really escalating, should there not be biglaang debt crisis in a certain country, um, so there. Of course, worsening of the water concessionaires will drag us, but I would like to expand that in our question and answer portion. But assuming no issues regarding sentiment, the fundamentals of the company, the value of the PSEI, if you sum it all up, that's actually 8,950 to 9,150. So there.